Hello, everyone, and welcome back. So, today we'll be analyzing the performance of my 2025 portfolio about 7 months in, and we'll go over how the portfolio is currently doing, how it was shaped by the macroeconomic trends, how the global events also affected the returns. And so, let's begin. Actually, let's go to one without the comparisons. So, if we look at the year to date returns, it's about 8.71%, and that's actually not bad considering the various events that have taken place. And if we look at what are the major stocks that have gained in the portfolio, we can sort by value. We can see that Adani Ports has done extremely well. It's already up 25.57%. Aadhaar Housing Finance recently shot up as well. It's up 27.85%. And Pi Industries is also 14.61%. And I recently made a video about that. Also, gold is 22.76%, which is huge because I believe we bought this ETF at a point where gold was already at its all time high. Here's what's not done well: KPIT Technologies, Adani Green, and Vodafone Idea. So KPIT Technologies is not done well because, well, the whole automobile sector globally has been in a slump. Demand has been weak. Moreover, Trump's tariff affected IT, and then that caused a lot of sell-off in the IT space. And while KPIT is not really considered a pure IT company because they're associated specifically with automobiles, so it's niche, but it was affected in that. So it's 4% down, not too bad. And Adani Green is risky. They have a case in the US where there is charges of um, basically fraudulent activity, and I'll cover that in a separate video soon. And Vodafone Idea, I wanted to buy it around the 7 rupee level. Right now it's 7.69 because eventually bought at 10 rupees because it went up in the 2 days it took me to make that video. However, I thought even at that price it would not drop so much, but I think they're losing subscribers month over month. And the government, while they have converted a lot of their debt into equity, they are still a bit hesitant to help them further, right? So that's just a brief overview of how the portfolio is doing. And if we look at, compared to the index, it's currently beating all the indexes very marginally. Actually, this is not an accurate representation of the percentages. I have made a separate spreadsheet of that to track the month on month returns. So the first 2 months it did not beat the index, but after February and in April it did extremely well. So overall it has a return of 8.71%. Meanwhile, all the other indexes are slightly lower than that. So let's see where it ends up at the end of the year. But now I want to talk about how the portfolio is done, right, and why. So initially, we can see, if we consider this the first phase of the portfolio, at this point, it was in March, it was about 15.31% down, right? This was because the Indian markets had become overvalued during this period over here in beginning of January, and especially the mid cap and small cap space had become overvalued, and foreign investors were essentially leaving India to go invest sorry in other countries such as the US and China, and so that caused a massive sell-off in the Indian markets. Moreover, Trump's policies about implementing tariffs and the various measures he was planning to take, basically that strengthened the dollar, and the bond yield shot up. So that also affected the Indian stock market, right? So if you look at this, yeah, so this is phase one, right? So there was global rate uncertainty. The U.S. Fed delayed expected rate cuts. Moreover, the budget was um not like the BJP did not make the whole government. They had to get other parties to form a coalition and then form the government. So the market didn't exactly respond extremely uh, like as well as it would have if they had formed the government as a whole. Um, and like I mentioned, there were also some geopolitical tensions during that time, right? Now, let me talk a bit about why is this portfolio kind of similar to the underlying markets, right? So that's because there are two types of risks when you buy a stock. There's systematic risk and unsystematic risk. So systematic risk is a risk that's inherent in the market, that uh, is basically if the market goes up, that stock will also go up, because that's the general market sentiment, right? Even bad stocks will perform well when everybody's extremely optimistic in the market. Unsystematic risk is that which is specific to particular stocks, right? So we can see clearly that in the first and second month, our portfolio has fallen more than the underlying markets, right? So that was because initially in January and February, Angel One, which has the most allocation in our portfolio, by the way. It was more excess of negative 20% because FNO regulations were um, made strict, and I did include that analysis in my YouTube video. And if we look right now, Angel One is still 3% up. It went up to 20%, it's back down to 3%, but eventually I think it will do well. um, so it is extremely volatile, right? It's more volatile than most of the stocks in the index. But yeah, basically, Angel One fell due to this. HBL Engineering also corrected, during the sharp fall because it had a higher PE because it's a growth stock, and Pie Industries and Coal India were already in a downtrend, due to which they were in a further downtrend, and it was not uh, like that's why the portfolio fell more than the market. So what I learned from this was I need to pay more attention to my entry. Although it is extremely difficult to time it, I was off by about a month, right? I should have waited another month before um, before investing. Okay, and now from March to April, right, we can see it went up by about 15%. Um, so why did it go up again? So basically, U.S. inflation cooled off, foreign investors turned buyers, and GDP numbers were strong, PMI numbers were strong, and yeah, basically the market was more optimistic. And I think this website tells us basically the foreign inflows, right? So let's see. So we can clearly see here in January there was a huge sell-off. February, huge sell-off. This is consistent with you know our portfolio as well. Jan, Feb, huge sell-off. Then we see from March there's a recovery, right? So if you look at the data in March, there is a recovery here as well. March, April, May, June. It's all foreign investors have turned buyers instead of sellers in the market. Um, Also, so we had this rally of 15%. Then in 4 days, you see a massive drop here of about 8.59%, right? So this was because Trump announced tariffs on India on a lot of different things, and the market turned pessimistic, and there was a fall. And then he basically announced that, um, well, that he's pausing the tariffs, right? Because he's doing this so that the US can get a better trade deals to negotiate, and then basically they have like they get more manufacturing opportunities in the US. So, and they get better deals from other countries. So while he's sorting this out, this is how it's affecting the Indian market, right? So it went back up though, and this was, um, yeah, this was after phase two, right? This little box here, that's just Trump tariffs, because if you look, that's the only thing that affected the market during that time. Now we move to phase three, which is April, uh, sorry, yeah, which is the India-Pakistan conflict. So I finally thought my portfolio is back to 2 lakhs, in April. So now it'll finally go up. But then the India-Pakistan conflict happened and then went down again by about 4%. And yeah, it's just been a very eventful year, right? And then at this point, a ceasefire was declared. So after the ceasefire was declared, then it went back up, basically. Uh, Next is phase five, right? This is actually no, we didn't talk about. Yeah, this is phase five. I numbered it wrong. Anyways, uh, let it go. Yeah, phase five. So June 12th to June 17th. Yeah, we're talking about this dip and this dip. What happened here? So basically, here the Israel-Iran conflict escalated. There were airstrikes. Crude oil went up. Foreign investors started selling again, and there were worries about US China trade deals. Um, and finally, recently, June 18th to June 20th, uh, yeah, that's not right. But, anyways, basically, now the market seems to have stabilized, right? You can see here right now it's between these two lines right here, our portfolio. And that's because, well, all of these events have happened and now the market has finally calmed down. And I think it will be it'll perform well this year, and hopefully we will reach that 30% target. But given what has already happened this year, I think that that might be a bit optimistic from my side, right? But yeah, the RBI did cut the interest rates, and I think they're planning another one soon to boost demand, right? Um, yeah. So this was basically just a short bit of all the events that happened. And if you look right now at the current economic situation, India still remains the fastest growing economy, right? And GDP forecasts are from 6.2 to 7%, and Morgan Stanley sees 5.9% in 2025 and 6.4% in 2024. So I think it is looking good for us from a point of view of how the rest of the world is doing, because of there's so much uncertainty. I think India is in a good position to benefit from it. I hope Modi and Trump strike a deal soon that will benefit both countries, and I think that's going to happen because India is making concessions to the US and being flexible, and because that US is applying less tariffs than other countries that they're dealing with, right? Um, Although auto and housing sectors are softening because urban demand is low, rural demand is pretty good, and the monsoon cycle was good, right? Um, what else can we talk about? There is political stability, and I think the government is doing some good reforms. So it's looking good from that point of view. And yeah, basically that's all I wanted to discuss. I wanted to keep this video Short, just talk about the portfolio. And yeah, I think the next video I will do is coal India, right? Which is almost flat, a 0.28% increase. And if you look at the maximum allocation, actually, my loss making stocks are pretty small in comparison, with Vodafone Idea being the smallest with the highest risk and the most losses, essentially. Uh, Actually, I can show you the yeah. See, Vodafone Idea had the highest risk here. Adani Green had high risk, and that's exactly why, high risk, high reward, and also possibility of losses. So that's why it's not performed well. But we're on track to achieve our objective to beat Sensex and Nifty 50, which was the target, right? So yeah, I'll release the next video pretty soon. So stay tuned for that. See you soon.